Hello traders out there in Traderland, my name is Des here at Grok Trade on Thursday, January 5th, 2012. Jobless claims came in this morning much lower than expected, helping out the markets. However, the markets started off the day quite bearish. However, rallied back strong around midday, and we end with the Dow negative territory, but not by much. The S&P up 0.3%, Nasdaq up 0.8%, small caps up 0.7%. You have Nasdaq, small caps leading the charge to the upside. So with that being said, there is a decent chance of a nice movement taking place northbound tomorrow. Banks led the markets all day long, up 1.4%. Anytime you have that sort of strength in the banks, you got something pretty special. VIX down 3.8%, gold up 0.7%, silver up 0.4%, and you have crude oil down a big 1.5%. Now get this, the US dollar up 1%. Normally, when the US dollar is up, the markets are down. We did not see that today. We had both the banks up and the US dollar up and the markets up. So, I'm going to open this up for discussion. Please tell me down in the comments why you believe that the US dollar being up still allowed the markets to stay strong. So I don't have an opinion on that. I just want your opinion. I'd like to open up some discussion, and I think the comment section below gives us that opportunity. All right. Looking here at the technicals, let's see what's taking place. I'm going to do something pretty special and bring in the financial markets, the banks here momentarily, that I think you'll like by the end of this video. But what happened today was a quick drop, breaking a new low. When that happened, there was a lot of us technicians waiting to start covering our long positions. However, it did not stay down there that long. It rallied back. Not only did it rally back, a lot of us believed, myself, and I was saying this in the chat room today, that I thought we'd probably doji out. I said that when we dropped, there was a good chance that we would have a candlestick that looked a lot like we did the previous day, which was yesterday. Sure enough, we got that. And then we went higher, and I said we'd probably come back down and doji out. But we did not do that. We actually stayed fairly strong here. So with the S&P, we closed above 1280. That 1280 is a huge area, and for us to close above it is pretty bullish. So not too shabby. So we do have a higher high here. Now you do have the makings of what looks to be a hanging man trend reversal pattern after a run higher. So we're not out of the woods yet. But let me tell you what has me thinking that we could be more bullish than what we see here. That is, we had this big symmetrical triangle and we broke higher. Every time we go lower, the bulls yank it back to higher ground. We go lower, the bears cannot keep it down, the bulls yank it back higher. So it shows a sentiment shift or bias to the bullish side. We're building a high base now. This high base is fairly young in its development, but anytime you get a base like this at a high, usually you bounce from that. Just kind of here, we come up here, build a base, we pop. Build a base, you pop. So that is something that would be considered more bullish and bearish. We're above all major moving averages. Also, we do stay and are above the zero line on the MACD centered oscillator. Now, let's bring in the banks. Here's the banks. We had this high base, high base, high base 3 days ago. Boom, breakout. We stay above the 200-day moving average. Sideways, sideways, sideways today. Boom, breakout. Looking very strong. So symmetrical triangle, breakout, high base, breakout. And we continue moving higher. But let's go to a weekly chart. This was huge. If you did not watch my year-end weekend edition video, I highly recommend that you still do that. It's 26 minutes long. There's a lot of information there. But I said we stalled here at the trend line. but I said we really would be bullish if we get over this and sustain this to the upside for the week. So we have one more day. If we can stay above this area, this 1670 area, if we can stay above that area, closing out the week, that's going to be pretty bullish, and I could see a lot of upside potential taking place in the next few weeks. On the monthly chart, we had this big, gnarly looking descending triangle. However, we're breaking a major resistance point. You can see this resistance. We come down, resistance. So again, each bar here is 1 month. And for the month of January, boom, we're breaking up over a major resistance point. We did stall out the 20-month moving average, but this is on the bullish side of this trend line right now. So long as we can maintain this movement, as long as we can stay above 1600 on the month, that would be considered bullish. But again, I would say the 1670 area, 1670 on the weekly would be really, really bullish. So do me a favor, leave me a comment down there, and that's the institution calling me. I'll have to call them right back. And we did pick up some more longs today because of what we were seeing here in the markets, especially the banks. And we like what we're seeing in the markets as a whole. We like what we're seeing in the NASDAQ leading, the Russell's leading, and again, the financials being so strong. And we have the VIX dropping, and the VIX is at 21 right now. So anyway, with that said, I'm going to sign off here. If you would, click like down there below, all you guys over there on YouTube. We do have a mentorship coming up January 21st, 22nd, 23rd. It's a Saturday, Sunday, and Monday. And if you'd like to join us, just click on the mentorship tab on the website and watch some videos. There's a lot of great videos on there that you can show that to you. Go down here, click on Grok Trade Mentorship, and scroll down here to the bottom, and you can see a lot of different students here, and there's a lot of videos that you can watch. So hear it from their own mouths. But mentoring is your next step, and we'd love to have you. Take care and safe trading.